tell. Vanda, Research Global Macro Strategist, is still with us. And Viraj, in the context of China, I know that you've been thinking a lot about the yuan, and you actually think it could be yuan volatility rather than, or yuan movement rather than dollar that drives the FX markets over the next month or so. What's your thinking around the yuan at this point?
Exactly. I think the Fed taper is bordering on being well telegraphed now, given how much airtime it's being received, and I think everyone in the market is really broadly expecting it. But the one source of risk, especially for FX markets, that's probably being ignored is that Beijing could have a great influence on the direction for just broad dollar crosses going forward. I think the dollar CNY path is probably the most important one heading into year end. We have a view here at Vanda that moves up to 660, potentially even beyond, on interest rate differentials, on a Chinese economic slowdown, and some engineered weakness to provide onshore stimulus. I think all of those factors suggest that that's probably the next leg of broad-based dollar strength. The spillover effects from a weaker yuan, not just onto trade and commodity-tied currencies, but also just general risk sentiment could be quite important heading into year end. So, for us, that's probably where the next leg of dollar strength comes from, from a weaker yuan, and that could have broad-based implications, things like euro, but also some of the commodity currencies in the G10 space.
Viraj, just this week, the Chinese yuan reached its strongest level in more than 5 years on a trade-weighted basis. And certainly, obviously, it's been one of the strongest currencies this year. The move up in dollar and CNY so far has just been the dollar. What do you think is going to mean that the slowdown in China and the interest rates moves hasn't weakened yuan at all yet? What do you think is going to be the change in catalyst to suddenly cause the yuan to suddenly start kind of being a softer currency compared to other global currencies?
Yeah, I think it's just a change in the cycle, really, as well. Obviously, China well ahead in terms of its economic cycle, naturally, coming down in terms of a deceleration in growth, and seeing that, first and foremost. So I think, offsetting that will have to be some sort of broad-based trade-weighted currency weakness, as you mentioned. The trade-weighted index, pretty strong still. So that, the path for that potentially moving lower. And I think, it's really about timing for the PBOC. So, unlike 2015, where we may have seen, an equity market correction followed really quickly by a currency market correction, I think, there's probably going to be a bit more gap this time around. So, we're seeing stability in the currency, but really an engineered weakness in the equity market. Maybe once things stabilize in the equity market, we might allow, see the PBOC allowing for capital outflows of weaker CNY on a broad-based basis, and just to avoid any sort of that sort of cyclical negative circle that we got in a couple of years ago. So I think that's probably our thinking, and it's probably just some onshore stimulus needed for the domestic exporters.
Some of the activity we've seen from China recently has been loosening policy, triple R cuts. There's talk of maybe another could come, and some injections by the PBOC, Viraj. Other parts of Asia doing things a bit differently. We've seen the Bank of Korea hiking rates. Do we need these parts of the economy to come into the global economy to come into any kind of alignment? Does it strike you as strange that we have these economies that can be so linked that are moving in different directions because perhaps they're fighting the Delta variant differently? Does anything not stack up to you there?
No, I think we're probably heading in towards a period, one of those odd periods of policy divergence, and especially central bank policy divergence. If you look at cross correlations across the bond market, they're at cyclical lows, and they've really come off over summer. And I think part of the reason is because it's pretty much every central bank, each to their own type of policy, really focusing on domestic factors, as you said, not just related to Delta, but also the speed at which economies are recovering. So we're in this multi-speed, very different, unique world, especially given the COVID pandemic and the unique nature of this crisis, where we could really see huge degrees of policy divergence over a short period of time. So I think that's probably our base case going forward.
All right, an interesting thought to leave it on, Viraj. Thank you very much for joining us, Viraj.